Alright, let's start. So, hey guys, what's up? In today's video, we're gonna start talking about the smart money concepts, and we're gonna make a back testing about the smart money concept strategy, but in the EURUSD. Alright. Now, first of all, we're gonna start with the easy settings on TradingView in order to use this strategy. Particularly, I use the next. For this, I never use volume indicators. I don't need them. I need the next tools that are the ones I'm gonna show you here. So they are the Fibonacci retracement, and let me show you the settings I have for it. It's very simple, very easy to understand. So I just use the 0%, a 1% or a 100%, and then the 50%. Just these three things, and with that I have this tool, which is the one I use to mark my imbalances, right? Then I use, well, a rectangle, easy, red color for supply zones, and blue color for the demand zones. Okay. Oh Jesus, no, that's a default demand. Perfect. Of course, buy and sell indicators, definitely. Then trend line, normal trend line, yes, normal bar, and I have done different selections from edge. So I have boss, which means breakup structure, liquidity, no boss, which means of course no breakup structure, strong high, strong low, with high and with low. So I have these different 1, 2, 3, 4, 5, 6, 7, 8 patterns for this one. All right. Wait. And now we're gonna continue. Perfect. Not that perfect as I wanted, honestly. Okay, give me a sec, please. Right. Much better now. So continue with the different objects I use here. This is as I said before, the trend line. Good. Now I have well, of course, the buy. Yeah, the buy or sell order right here. Now I have the sell one here. Perfect. And I have this one, which is an also trend line tool, but this is like the continuous trend line, so the one that you can grab and create a continuous pattern. So just to make graphs. Sometimes I use this horizontal ray, and I use this like the market projection, which draws some candles. It's cool to see, but it's the same, right? And then I use this one, the horizontal ray, which is also one that I use for this. All right. So let's start now with the analysis. These are like the tools I use in order to work with this strategy. Okay. I'm also gonna put here what are some of the, what I mostly use for this strategy is analysis, chart analysis. I don't like to use indicators like RSI or any other type of indicators. I don't use waves or nothing like that. I'm not used to it. But I do use some tools to watch in the market, right? So those tools to see the market properly are the first one is the week and day separator. I use it of course to separate the week especially, right? And then kill zones, daily and open. So sometimes kill zones I don't use it that much, but the weekly and day separator I do use them a lot, right? Perfect. So it has the next configuration. Sorry, so seconds, minutes, days, what I use, the style. It has a normal color for each one. I just need to put here, let me check one thing here. The color for Monday's operator, no, it's just week separator. This is the color for the week separator. Can I put this one here? Right here, this one. Can I put this red one? Perfect. Okay, and this is the one I use for separate the weeks. Some is necessary, sometimes it's not that much, but I sometimes use it. Right? Perfect. Alright, now let's keep moving. So to do the backtest, now that you have everything set it up, which is the indicators, which is the week and day separator, nothing else. Your tools already, okay, set it up. Well, it's time to start with the analysis. Now I'm gonna use 5 minutes time frame to do the next, because since I want to recreate the most because I want to simulate the market as it actually is, like daily when you are in a session, which is, let's say, New York or London session. I go to 5 minutes time frame, and then I use my trading view tool to do the replay, the replay mode. Okay, and I go to 5 minutes. Why? Because since this strategy needs me to enter in 5 minutes time frame, I need to do the confirmations and enter an edge, right? So again, just put this here. Wait, stay. But I need to. Okay, this is the maximum I can go. This is the farther I can go with the 5 minutes. With the 5 minutes time frame. Okay, perfect. Now I can go more. All right, let me try to go further. With this, it's again, as I said to you before, it's because I want to recreate the market as it actually is in 5 minutes. All right, gonna go back just one time more, and that's it. Or I'm gonna start from now, from this point. All right, perfect. So this is the okay. According to this, we're in the month of September 2025. Okay, and the price is currently here. Now we're analyzing daily on daily time frame, the current direction of the market, and once we spot that, we're gonna keep we're gonna go with the analysis, right? So in this channel that I have explained to you how to identify the beginning of a range. This is what I'm doing right here. So this is the liquidity taking right here, and this is the loss. As this is back testing, it's likely that I'm not gonna explain everything on detail, because it's not like a video in which I'm gonna explain everything. It's just for practice, and I decided to make this backtesting session live because anyway I make it private for my own. It's like personal study. So I just decided to make this as a strategy practically, in order to, like, say, I mean, in order for you to know me, right? You, the followers, the people who are watching this, even though there's few, but I don't care. As I said to you, I used to do this. I have to do this on my own privately, and well, I decided to do it on my own because at the end I have to do it, right? So if there is 1 people, 100 or 1,000,000, doesn't matter for me, because I will keep doing this on the privacy of my studio. So there's no way, there's no problem, right? So that's a strategy I'm using here. So as I said to you before, so what I'm doing right here is that I'm just analyzing the market. I'm analyzing, finding the current market direction. What I'm doing here is highlighting the strong high and the strong low and the weak high. Weak high because it's likely to be broken, a strong low because it's the one who's being respected through the pass of the time, right? Now, as you can see now in daily time frame, we can spot that it's a bullish trend, very obvious, right? And the price has made a break of structure right here. So after this break of structure, we're just gonna wait, right? And we're gonna keep analyzing the 4-hour time frame. Okay, we already know that we are in a bullish trend in daily time frame. All right. Now let's go to 4-hour time frame, and we're getting closer to the market, right? So in 4-hour time frame, the previous range we have is this one, it's bearish one. So we're gonna again do the same exercise of identifying the weak high, the strong high, the weak low, right? Why is that necessary to do? Because once you spot that, you know the direction on 1-hour time frame. Remember, each time frame has its own direction, its own movement, and as traders we need to understand what is the movement, right? And or the correct direction. This is what I'm actually doing right here, right? Now, this is the strong high. This is the strong high, which means that this is the strong high 4 hours. Remember that when it's a strong high, it's because this high is slightly respected through the movement, and this is what actually happened. So after this high, there is no higher highs, or the highs are lower, right? And for example, look, this was the previous 4-hour range, which was bullish, but after the break of the structure, it has changed the direction, right? Now we are in a bearish range, at least in 4-hour time frame, right? Then this is the magic order or analyzing each time frame. Alright, so 4-hour time frame right here, I'm gonna mark them because you need that clarity to understand the market properly, right? Now, this is the thing. We have strong high, beginning of the range, break of structure, and then the same, we have a range ending right here. So this 4-hour range has been ended. Okay, it's ended up. Perfect here and here. That's it. So once we have this very strange, we can understand what happened. So the price reacted here, probably in a daily imbalance or an order block, and it kept pushing up and up and up and up and up, right? Now it just is reaching to this supply zones right here. Here is a supply zone. For those who doesn't know what is a supply zone or area, it's where the selling orders are accumulated. That's why when the price reacted right here, it entered and had this small reaction, right? Perfect. Now what are we gonna do? We already know that in 4 hours we're bearish. The price is having a reaction here. Now we're gonna go to 1 hour time frame, and we little bit later we're gonna get to the we're getting to the, let's say, closer. We're getting closer to the trend line we needed. Okay. All right. So again, as we can see right here in 1 hour time frame, let's try to spot the previous range. Okay, the previous range means the most noticed, the most evident impulse, right? So as you can see here, look at the next. You see this one, right? Bearish, right? This bearish movement. Now this bearish movement is showing us what? That everything that is happening here in the middle is just, how do you say, noise in the market. It's not actually a real movement, because this is the bearish trend. Okay, so this is the bearish impulse we're spot. Now let's do the exercise of analyzing it properly. Okay, let's see. And they're gonna let you know why I'm starting from this one. Alright, so this is the higher high, and then we have the lowest low, which is this one, right? Perfect. What happened after this? After having this high and this low, the price keep pushing up, reacted in the supply area, which is this red area, go down, but it never broke, it never continued with the downtrend. It means that the price did not keep pushing down, right? Yes, it did not, right? It did not keep pushing down, right? And that means that it's changing the direction, right? So it just continued with the bullish impulse. And if you remember, let me write it here so we have this even clear. Remember that in the daily time frame we were what? We were bullish, right? Bullish. In 4 hour time frame we were bearish, and in 1 hour time frame, as you can notice, we were bearish as well, because the price entered right here and it keep pushing down, right? But after the break of the structure of this high, it has changed the direction and now it's bullish, right? Bullish is a bullish trend, right? So this is the time frame direction, and you need to spot that very clearly, because as lower time frames we get, the easy to get confused becomes, right? Now let's keep analyzing. So since this is the high, the weak high, it means that it will keep pushing up, apparently, right? Apparently. This is the weak high. Perfect. So the closest low will become our strong low, right? And this, you would ask me, but how a low can become a strong low? Well, as I said to you, this is a practice backtesting space. But anyway, if you have any further questions, just write it. But if you don't know, I already have a video in which I explain how to identify or how to differentiate a normal low from a strong low, right? And as I'm marking here, is just the liquidity is being done right here, and then we have here a break of structure, right? Here, a bus break of structure. Jesus. breakout structure. That's it. So this is it. We have this. All right. After this, we're just gonna analyze from this point upwards. Okay, from this point upwards. Guys, if you want to watch this live better on YouTube, I'm also on YouTube. So I suggest you to go to YouTube and watch it in the proper screen, because unfortunately on TikTok I'm making the live with my cell phone, which is not the best, honestly, but while it gets better I provide you that option. Okay, I provide you that option. Alright, so let's keep going. So let me check one thing here. Wait, synchronization. Yeah, here it is. So here is a link if you want to join, right, on the YouTube. Okay, now let's keep moving up. So we are here. All right, now that we got in 1 hour the trend line, which is bullish, now we have let's say the range we're gonna work with, right? Remember, we were bullish. I'm gonna put this here. We were in a daily time frame, we were bullish, right? Daily time frame, we were bullish. 4 hour time frame, bearish, and now 1 hour bullish again, right? So what is it what we have to follow? Well, the one in which we're working with, which is this one, which is the 1 hour time frame, right? That's the one we're gonna keep working with, and the one we're gonna, let's say, respect until I'm gonna let you know until when. All right, so now what is the next step? Next step is to analyze the order blocks and points of reaction, right? So one of the videos I got here in this channel, I have taught you that we have an extreme order block, which is extreme means to creator of the movement, right? Which is this one. And then after a break of structure, the price can create another type of order blocks which are called decisionals. Yes. Now, actually, as you are watching right here, this is the 1 hour extreme order block. But if we go to 4 hour time frame, even though we're still bearish, right, the price has formed as well an order block, which is this one, as you can see. So we're refining the order block properly, right? Now let's keep moving. All right, so what is the next step? Well, as you can see right here in the 4 hour time frame, we are bearish, right? We are bearish in 4 hour time frame, right? So the common belief would be, if we are bullish in 1 hour, we have to keep buying, right? Because it's bullish. But if the price reaches to an order block in a higher time frame, which in this case is 4 hour time frame, you need to change your mind, right? Now look at the next. The price has reacted in this order block, perfect entry on the EURUSD in 4 hours. Now we're gonna go to 1 hour time frame to check what actually happened here. And if we zoom up this order block like this, right, in this order block we can see that we have an 1 hour order block right here. This one, which is here, right in the middle, right here. So what is the reason of this refinement? It's because you needed to understand if this reaction allows you to enter in the market or not, right? Now that we have made that refinement and we go to the actual or the current market, we can see that right here, right in this moment, in this point, the price did had a reaction, as you can see, right? And now let's go to 5 minutes time frame to watch if there was a confirmation pattern. And if it is, if it had a confirmation pattern, it means that there's an opportunity to enter. So look at the next. Here is, this is the weekly high, breakup structure. Yes, so of course it has done it. So look at the next, my friends. The confirmation pattern looks like the next. Take up liquidity, and after the liquidity taken, we need to spot the boss, the breakup structure, which is this one. Perfect. After this breakup structure, we're gonna look for the order block, the closest order block, which will be this one right here. Boom, here it is. This is the closest order block, right? The one which is closest to the market, right? Supply. And now we may say that there are another order blocks, because you can see one here combined with an imbalance, and another imbalance right here, and another one here. So the question is, what is the order block that will work the best? Well, for that case scenario, we need to watch something that is called the liquidity. Now, if an order block has prior liquidity, there are great chances that this order block will be taken or will be mitigated. In other words, if you put your stop loss there, it's highly probable that the price take your take profit. Why? Because there is liquidity prior to entry. All right. Now, let's keep analyzing, my friends. Let's keep analyzing. Let's try to analyze the liquidity, which is right here. We put the liquidity here, and now we have the next, which is liquidity. Perfect. Now this liquidity is likely the price to do the next. Now, okay, let me do a summary of what we have done so far, right? So we have already analyzed daily time frame, which is bullish, right? 4 hour time frame, which is bearish, and 1 hour time frame, which is bullish. Now, as we are working with a 1 hour time frame, you would say, because this is bullish, we have to keep looking for buying orders, right? Because we're looking for buying orders. Yes and no. Why not? Because the price has entered in an order block of 4 hours, and remember, higher time frames are the ones who determine the movements in the market, right? So even in 1 hour time frame is bullish, it has reacted in a 4 hour time frame bearish order block, right? Or supply order block, or an order block that has a lot of selling orders. And if you can see it right here in this, as we actually are, there are 2 possibilities for the market. What are the 2 possibilities? One is the price will keep pushing up, reacting in this imbalance, and go down, right? That is the possibility I'm actually looking for, right? And there is another possibility, which is that the price can go a little bit down, had a reaction, and keep pushing up, right? And then you will say, why, Manuel? Why probably it will go down a little bit further? This is because here is an imbalance. and my mouse got out run out of battery. Jesus. Perfect. Yes. All right. Yeah. So as I said before, well, fortunately, let's see. In 1 hour time frame, here is an imbalance right here. Oh my gosh. So in 1 hour time frame, the price may go down, react on this imbalance, and keep pushing up. Sorry. Or even it could go down and reacted on this order block or this decisional. Remember I told you there was a decisional? This is a decisional, right? Why I didn't mark it? Well, because there is liquidity prior it. But it's a great point to take into account, right? So here it is. This is the supply zone, the supply area. Alright? So sorry, as demand area. Sorry, no supply, demand. Good. Alright, so this is actually where we're gonna wait for the price to do. If it does it. If it's not, it's alright. It's just part of this analysis. Alright, let's now in 5 minutes, that's the summary, alright, of what we're actually doing. Now in 5 minutes, what we're gonna do is that we're gonna place an order right here, a selling order, because currently that's where we are. This is a Sunday, right? Sunday. Perfect. So we're gonna put an order right here. It says it is how many pips? 6 pips. We're gonna put here 9 pips. Okay. And what we're gonna take is this. 4 times more. So yeah, 1 to 4, right? And see if the price does what we actually are waiting for the price to do. Okay, so let's see. That's the open. This is the open on the next week. It's already Monday. The price is having a reaction, and as you can see from the 2 possibilities, the price is going down. So it did not activate our order right here, which is fine. It's okay, no problem. All right. So what we're gonna bear in mind is the sessions, right? Let me check. All right. What I'm just activating right here are the sessions. Okay. So we have 2 sessions. We have here. If I'm wrong, let me check what we have here. Why do we have to bear in mind the sessions? Because we cannot trade every day. We need to trade in a particular day. So in red we have New York Open, and in green we have the London Open, right? So far we're out of the market. There is no order. Wait, what is this line? I gotcha. Well, I don't want this line. London close. Okay guys, give me a second. I'm just gonna fix this. London open, perfect. London open, close. I just want to erase these bars. I don't like them. Yep. Now let's keep moving. This is the order actually had going on. Now we are in this is Asia, if I'm not mistaken. Is this Asia? Yeah, this is Asia session. The blue one is Asia, right? Well, in the market, the price is just having a certain accumulation, as in all the Asian sessions, most of them. Let's wait. Okay, so now, as you can see, the order was activated. Now, Would this order worked? We don't know. Probably. We're just doing a back testing, right? This is we are almost in London opening, right? So let's see if this actually works as we expected, or the price simply continue with a different movement. So as I told you before, the price may go down. Jesus. Wait. Euro. Look, what happened after this? Remember I told you that there were two possibilities, that the price could enter and took us out from the order because here it was liquidity. I mark it right here. So if we enter right here, we went out, normal. The second possibility is putting an order here in the imbalance, right? And now we're gonna fix our stop loss, which is here 11. I'm gonna put 13. Yep, 13. Now let's see what actually happened after this. I think we're already in London. Yeah, I don't know, sorry. Green is New York. Oh, we're in the New York Open. Alright, so look at the next, what happened. The price did actually took us out from the first order, and now we're gonna wait to see what happened in the next one. Okay. It seems okay. It did activate our order. Look at the next. Alright, it activated. Now it's time for us to wait for the result, right? Okay, it's having a reaction, normal. Alright. Some of you may ask, why don't you just skip off the movement and see the final result? It's because I want you. It's just because I want you practice the patience part of this, because this is how the real market works. You need to be patient. So now it's having a reaction. Let's see if this actually worked or not. Right? If not, it's alright. If yes, perfect. Let me adjust again the take profit limits, because we have a different stop loss. Apparently it's having a reaction. We need to be patient enough to keep waiting. Join from your post, says M's Diary. Thank you so much for watching my videos. Yeah, that's same as LSM. Good. Thank you guys, I appreciate it a lot. If you're not subscribed to my YouTube channel, I kindly suggest you to go and subscribe to my channel, because there I post explanation videos about these concepts of investing, right? Right, so it got a reaction as we expected, but apparently it will take us out. But we need to be patient and wait. Why? Because we need to respect our trading plan. We need to assume the risk of the order. Sometimes I have had trades in which I don't feel comfortable at all, and I think they will be losing trades, and that's what I feel about this one. But let's wait. So maybe you would wondering, if you were not sure about this trade, why did you still put it? Because it's following my trading plan, right? And if it says that I need to put an order on my trading plan, even if I don't like it, I have to do it. Well, actually it's having a reaction. Very cool. Sorry for the noise. Let me check one thing. What happened? Nothing. Nothing has happened yet. Much better. So this red, so we enter this, it was open at 8 o'clock, this order, and according to the market it is 12 of the midday. Again, let's wait for the result. Let's wait. So by the time I'm in the market, I wait, you know, like until 12 p.m. more or less on average. After waiting that time, I just keep doing other things in my life. You know, I don't spend too much time here because it's not needed. I mean, it's an experience. Personally, for me, it's extremely stressful to be on the market. So I put the order and I let it be, practically. After this break of the structure, there are some rules that I'm not actually applying here because it's backtesting, right? But when I'm actually on the market, I put break even. If I have to go, I put break even, right? No problem. Alright, let's see what is the result of the order. Alright, okay, and this order took us out, which is part of the trading plan. Alright, let's stop this and watch the next. Alright, so far we are out in this order, and now we have confirmed the next, that in 4-hour time frame, that's what I guess. Yeah, in a 4-hour time frame we are bullish, completely bullish. Why? I don't know yet. Not yet spending this. So there's a lot of liquidity to be taken here in this high. So let's continue, my friends. This is 2 o'clock. Let's go further in the market. Perfect 3. Alright, I'm gonna move, or I'm gonna forward this up to New York session, which is the session I like to trade. Now the price got a reaction even higher right here. Why? Because maybe in 1 hour time frame here it was an order block. Yep, here is, look at it. It's this one. Even though it had already been mitigated, look right here. But anyway, that's why the price, when it reaches this area here, it had this reaction. All right. Perfect, guys. Well, so far that was the result of this backtesting order. We're gonna see in further backtesting sessions how it works. Okay, we're gonna stop the live right here, and well, thank you for those who were here watching the live. All right, see you soon.